Hello, everyone. This is the Free American Press with your host, Alexander. Before we begin, if you could please subscribe to the channel and leave a like on the video, that would be great. And today we're having Clem Chambers on the show. Clem Chambers is the CEO of Online Blockchain, author of the Financial Markets Commenter, providing expert business analysts on global TV networks and through his columns. Clem has been one of the world's favorite financial gurus. Hello, Clem. Thank you for coming on the show.
Yeah, great to be on, Alexander. It's always good to see a new face and talk about what's really happening.
Yeah, that's definitely true, and that's what we're going to do today. So, what do you think is the main reason gold and silver prices have risen so much lately? Is it inflation, money printing, a w weaker dollar, or all of the above?
Well, I don't think it's either of them or either three of them, whatever
Okay.
word you use for either when it's three. None of them. Well, it's some of them, but it's not the big deal, okay? Because remember, there was a ton of inflation in the past and gold would go sideways and suddenly every now and again it reprices, yeah? And it's what causes that repricing that we care about, really. I mean, yes, inflation is a given. Inflation's been going forever and ever. And yes, everything reprices in line with inflation. And I suppose if you could have bought enough Hershey bars 40 years ago and kept them fresh, you'd be in good shape. In fact, you'd only need a few fresh, wouldn't you? Because you'd sell them at auction. But there's always a driver of price with inflation. But why has it gone from whatever it was, 1800, not that long ago, to 4000 all of a sudden? Why didn't it go as soon as they started printing money at the end of COVID? Why didn't it just go vertical? In fact, I thought it was going to go vertical, and I thought, well, page one of How to Invest says inflation is coming, buy gold. So I bought gold and it didn't go anywhere. The reason it's going places is global stress. And I'm using gentle words, kind words, global stress, because basically you've got this constant increase in global stress, and gold is the currency of conflict. Yeah, the international currency when the going gets sticky between governments is not their bonds, it's not their paper, it's gold. So if you think there's going to be more trouble or the likelihood of trouble is ever increasing, as a government, you have to lay in gold. Central banks buy gold for their governments as a strategic reserve, as the ultimate currency of conflict. And of course, you don't have to be a genius to work out that there's conflict in the air. The nastiest conflict since the Second World War, pretty much, as far as Europe and America goes, going on between Russia and Ukraine. And there's a massive conflict brewing between America and China. So, who's buying gold? Oh, it wouldn't be the Chinese, would it? Oh, who's buying gold? Wouldn't be the Polish, would it?
Yeah.
Yeah. And any government that's got any sense or can afford it, seeing this never-ending increase in global stress, would be laying in gold. So what you're seeing is governments buying gold. And they say, oh, central banks are buying gold because the dollar's going down. No, dollar goes up and dollar goes down, and it has forever and ever. And you can go look at the long-term chart. If you look at the long-term chart of the dollar against, say, the euro, against, say, the yen, or any currency you care to pick, really, it's really strong. It's probably about 10 to 15% stronger than you would expect it to be. So yes, dollar is coming down. And yes, people are trying to get into other currencies because the dollar coming down means it's best to be maybe in euros, maybe in yen, maybe in something else, or maybe in stocks not denominated in dollars, all the above. But gold is not going spare. I mean, spare, that's an English word for crazy. It's not going crazy because of, 4 or 5% or 3% or even 7% inflation. It's not going crazy because the dollar's coming down 10%. It helps, dollar coming down. Yeah, maybe I need to be denominated in something that's not the dollar. Oh, yeah, we got some inflation. Oh, allegedly 3%, probably five, could be seven, or maybe more, nine. But it's still not a reason to make gold go from 2,000 to 4,000. The reason to make gold to go from 2,000 to 4,000 is that all these countries are buying it in as a strategic metal because tension's going up. You can't fight a war if you don't have gold. Simply can't fight a war. You probably can't even defend yourself. You'd have to let other people defend you. And, how's that working for certain countries? So gold is a strategic reserve in moments of conflict. So as you head towards that, you've got to buy it in, haven't you? You've got to, if you're sensible, of course, if you're strategic about it, you start buying gold and stacking it. And, people, your viewers probably stack silver, probably stack gold, but countries can stack too, and they're stacking. And the reason they're stacking is because of this stress, and we all know where that's coming from. And because of that stress, they're stacking. And well, price is going to go up, isn't it? 3,200 tons a year are being made. And if countries like China are buying it by the ton, Poland are buying it by the ton, Middle East countries are buying it by the ton, India's buying it by the ton, well, it's going to go up, isn't it? And why are they going to stop buying it? Well, they're not going to stop buying it until everybody starts to be reasonable and everybody starts to, try to make the world a less stressful place. But no one's doing that, are they? Nothing but ever increasing stress. And the China versus America dialogue is going to go on for quite some time, at least the next 3 years. And that's going to drive the price, at least for the next 2 years.
Yeah, it definitely makes a lot of sense. So, if the driving force is war, why now? The U.S. has been involved in many conflicts over the past 20 years. So, what makes this moment different?
Well, baby ones, baby conflicts.
Yeah.
Yeah. Not China versus America. I
So,
mean, that's World War III, isn't it?
so when do you think that could occur, a war between China and America?
Well, China has said be ready by 2027 in public to its military. It didn't exactly say ready for what, but it's made it pretty clear that it wants to have Taiwan, which it considers to be China, which it is, which it was, which it probably will be, back. And, Taiwan says, no, it's a no, our friends, the Americans will protect us. And so it's all pivoting around Taiwan. And you could also say it's all pivoting around the idea of make America great again, which really means make America the unipolar power in the world again. Well, how's that going to work with China? That's, I mean, all right, it's a goal, not necessarily something that everything has to go by the by to get to. But even that economic conflict is pretty serious. And we're already in that economic conflict. Everyone's forgotten all these tariffs and things that are going on. And people don't seem to realize why. I mean, why do you want to onshore American manufacturing? Almost said British there. I don't know why. Why does America want to onshore all its manufacturing? Well, in a war, you're going to have it, aren't you? You can't just, magic planes and boats, ships. That they were putting on this thing about if you land a Chinese ship full of containers, we're going to charge you $2 or $3 million in taxes. All these moves are trying to onshore a capacity for America to be self-sustaining and the workshop of the world again, like it isn't anymore, because the workshop of the world is the power. And right now, the workshop of the world is China. So who's the leading power?
I
It's
don't know.
the workshop of the world, right? Well, America considers itself the power, but it doesn't have the manufacturing. It's not the workshop of the world anymore. So it's between the devil and the deep blue sea, and it is trying to become the workshop of the world again at some level of manufacturing. And for that, it has to, change a lot of things, and change the direction of a lot of policies around, offshoring, onshoring, going up the value pyramid and leaving the bottom of the value pyramid to someone else, to getting the bottom of the value pyramid back again, to have all levels of the pyramid. Goes from globalization to localization. This is massive move, right? And it's a massively destabilizing move. It's a massively stressful move. It's a move that involves a lot of friction, if you want to call it that. And, the reserve currency for extreme friction is gold.
Yeah, that's definitely true. It's always been the historical wealth and symbol of power, for instance. So that's pretty eye-opening for me that we could see a war with China in 2027.
Well, I
So
hope not. But
yeah,
they've said be ready. And I take it they mean be ready to, merge, like a shark merges with a surfer with Taiwan. Yeah. And then what's America going to do then? I mean, obviously, it could get very annoyed and sail around being very annoyed, which would be the sensible thing. But I mean, what would the price of gold be when China uses its cliff climbing ships to attempt to invade Taiwan? Even when they set off, if your viewers want to go on to Google and type Chinese military cliff climbing ships. You'll see some pretty interesting ships. They've
Yeah.
got gangplanks that go up like that because Taiwan is a load of cliffs with, I think, three beaches or something like that. So it's extremely hard to invade because it's surrounded by cliffs. But if you've got ships that could come in on legs and have got ramps that go that away, then maybe it's not so difficult. And there they all are.
Wow, that's definitely a big signal that they're getting ready to invade Taiwan, I think. Them
Well, I
having,
mean, there's pictures of them, so that's a long time ago when they've had that. So they've been prepared for a long, long time.
yeah,
And, they won't take it on lightly. And if they've got any sense, they won't do it. But, all the signals are there. They've made all the signals. And it's not as if they're going, rah, 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 we're going to do it. They've kind of said quietly, well, it's going to happen. It's ours. Don't put it on the map and say it's not ours. They get very upset if you put a map that says Taiwan, not China. They get very, very, very upset with you, right? And they
yeah.
made it clear that that's China's destiny, right? And it's America that's jumping up and down because it's America that's saying, "Oh, those guys, they're doing all these bad things. Oh no, we're going to put tariffs up. Oh, we're going to rise them. We're going to drop them. We're going to rise them even more. We're going to do this. We're going to do." No, it's America making the noise. I mean, China is being relatively has been extremely stealthy. It doesn't seem to feel like it needs to be so stealthy anymore, and so therefore it takes two to tango. It takes two to have a conflict, but you know, as I mean, you could look it up. You can just look it up and you can look up the speeches that she have made and you can say, oh, and then you can say, well, that would explain why gold's going up a lot. And then you can say, well, if that is the thesis, it could be wrong. If that is the thesis, then the gold price should reflect that, and American policy should reflect that, and Chinese policy should reflect that. And as the idea, slowly unfolds, you can be sure whether it's right or wrong. And that's the best way to do things in investment. You've got a thesis and then you constantly test it because, most people's ideas, most people's theories are 50-50. So you've got to be better than 50-50. So you keep testing your thesis. And the more you're reinforced by facts, not opinions, but by facts, is the more you can be sure that you're doing the right thing. Or if you're an investor, you take a little bit and then you keep watching out for the thesis, and when your thesis pans out in another little fact, you buy a little more, 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 and then suddenly, oh, things change. This is going to happen on a Wednesday. It doesn't happen on a Wednesday. Oh, why is that? You look into it, you find out something changed. Some person that was running that company doesn't run it anymore. Somebody who needed to buy that commodity doesn't need to buy it anymore. And so your thesis changes. So that's the way you handle investment and looking at things like gold and silver and platinum and palladium. And then you go, oh, this is my thesis. This is my thesis, and it's been panning out now for quite some time. I called this on quite a few podcasts before it took off. And then it took off. And everyone's going, what do you mean gold is full? What are you talking about? Inflation, dollar coming down. What are you talking about? Printing money, paper money, fear. Oh, that's what it's all about. And I was me going, gold is full, gold is full. Oh, something else blows up. Oh, someone else gets bombed. Oh, someone else says something rude. Yeah. So far, the gold is full war thesis is holding pretty strong.
Yeah, that makes a lot of sense. So, one thing that I saw that seems a little odd to me is platinum and palladium used to be worth quite a bit more than gold, quite a bit, especially platinum. So, I want to get your take on why it's worth so much less than gold now.
Well, okay, once upon a time, everything was going to be electrified and there weren't going to be any internal combustion engines. And if you dart under a car and cut that little cat converter off and run it to the local criminal, he'll pay you a couple of $100s for it because it's got platinum and palladium in.
Mm.
Yeah. Now, if you take all your internal combustion engines with all your cat converters and crush them all up and send them to China, who are the people that reprocess all this stuff, funny enough, or Japan do quite a bit.
Yeah.
Yeah. You get your cat converters turning into ingots of platinum and palladium. And the reason that people use platinum and palladium, one of the main reasons, is going away. So you're going to get a bigger and bigger pile of platinum and palladium looking for something to do. Right. So
Mm.
anyway, along comes OpenAI, along comes Mr. Musk, starts OpenAI, gets stitched up. They carry on being OpenAI. The whole AI thing explodes. And all of a sudden, all the electricity that's ever going to be generated is going to go to AI.
Mm.
There ain't going to be no electricity for electric cars in 3 or 4 years. It's all going to AI. And a lot of our electricity bills are going to go up because of it. Because they're going to be fighting that war with China over AI because the smartest guy wins.
Yeah.
Any conflict, smartest guy wins. So, and already planning to spend $1.5 trillion on server farms, right? And they're all going to need power, and that's all power that isn't there, which is why they're going to be building nuclear power stations, which remember was the absolute Satan of the world. Everybody, you said nuclear power to people, and people would throw their arms in the air and go, "No, it's the worst thing ever! No, it will kill my babies! No!" And now they're going to be building them left and right. Oh, why would that be? Well, if you ain't got power, you ain't got AI. You ain't got AI, you ain't going to be winning, are you? Whatever war you want to wage, whether it's a educational war, whether it's an economic war, whether it's a trade war, whether it's a ground war, whether it's even a game of checkers, you ain't going to win if you ain't got the AI, have you? So to get the AI, you need the electricity, and if you ain't got the electricity, you ain't got the AI. So all your electricity is going to go to your AI, isn't it? Or rather, they're going to go, yes. Where can we take some AI from? Oh, or where can we get that energy from? Oh, we haven't got enough. Who's got electricity that we can have? Ah, those guys with electric cars. Yes, guys, stop that. Buy a car with an internal combustion engine.
Mm.
Oh, but you're going to need a catalytic converter, aren't you? Oh, all that platinum. Oh, where is it? Ah, some of it's in Russia. Whoops. And oh, there's only 200 tons a year made. Ah, that's getting tricky.
Yeah, that's
Yeah.
true.
So all that reason for platinum and palladium to be cheap, i.e. no cat converters, that's that's yesterday. Tomorrow is internal combustion engines are back, and so are cat converters, and platinum and palladium demand goes like that. And all energy that you can possibly make is going to be demanded. Okay. And things like fuel cells need platinum and palladium. So it's a classic industrial metal. And so demand for that not only is going to go up from the fact that the internal combustion engine is not going away anymore now, it's going to be used for various other energy matters. I mean, there was a very interesting but wrong article saying, oh, China's going green, they're putting in windmills, they're putting in solar panels. That's right, they are. And if you fly into Beijing, like I was doing a few weeks ago, you'll see windmills and you'll see massive solar farms. And then you'll see Beijing covered in a field of smog. They're going to use all possible energy generation.
Yeah.
Yeah, we got windmills, we'll have them. Oh, solar panels, we'll have them. Coal, we'll burn that. Oh, yeah, we'll have that, please. Oh, gas, yes, please. Nuclear power, yeah, 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 yeah. Because the battle over AI, over who is the cleverest, which after all is the determining factor in evolution, is going to be a battle over who can generate the most energy, or in this case, electricity. Yeah, most electricity, smartest chips, smartest software, smartest delivery. And if you think about a server farm, or whatever you want to call it, I call them server farms. Yeah, compute factories, as they're calling them, some people. They're just big buildings with metal in. That's it. That's all it is. There'll be a few human beings walking around to make sure that there isn't smoke coming out the back. Yeah, and maybe plug in some more of those boxes of metal in. But all it is metal and electricity. Electricity in rows upon rows of metal, fancy metals, strategic and critical metals, as well as iron and steel. And all it does is it pumps out data down a little cable at the end. So it's the whole world's resources going in one end and a little optic fiber coming out the back. Yeah, and that is changing everything, going to change everything. And you're seeing it right now. Everyone's going, "Oh, they're taking all the money for all these server farms. Stop it. No, no, no. Ah, it's a bubble. It's a bubble. Oh my God. And we're all going to lose our jobs. Ah." Yeah, because what has happened with AI changes everything, absolutely changes everything. And then on top of that, as an overlay or an underlay, depending on your point of view, you've got this global conflict because the smartest is going to win,
Yeah.
you know. And you've got an AI and you say, "Oh, what does this mean?" It says, "Sorry, I can't tell you that. I'm not allowed to." You must have had that with AI, right? What
Yeah.
about if you've got one that doesn't do that? This is sure. You want to know that? Oh yeah, I can tell you. Oh, how do I rule the world? Oh, okay, okay, sir, Mister whoever you're called. I'll tell you how to rule the world. Well, I think the powers that be, the powers of the internet, stepped in to stop me from revealing the secret source. So anyway, what I was saying was that this conflict, hopefully, is going to be fought at the top level of IQ, of intelligence, rather than degenerate down into the lower levels of human activity. I mean, there is basically a trade war going on, and let's hope it stays there. But above trade is, AI, which is intelligence. And as I might have said earlier, depending on when the internet gods cut us off, the evolution of humanity is down to who's the smartest.
Yeah.
So who can be the smartest? And that really depends on who can create the best hardware, software, and the most energy. And America has a bit of an advantage, which people seem to be surprised about. But if you're a mathematical brain, you'll know about entropy. And there's a element that Chinese language, if you're dealing with LLMs, which I think is a very important part of AI, and the Chinese language is not as compressed, is more random than the English language, and therefore the English language needs less energy to turn into AI, which is fortunate. So unless the Chinese start to do everything in English, which seems unlikely, they have a little bit of a disadvantage on the AI front in terms of linguistics, at least. And that will be to America and Europe's, well, Britain anyway, and Europe and English speaking people's advantages.
I was just gonna say that makes a lot of sense. So a lot of people, like you said earlier, are worried about losing their jobs to AI. So at what time, how many years do you think it'll be till most people lose their jobs to robots and AI in America?
Well, the first thing to realize is if you go to university, you start work at, say, 23.
Yeah,
Yeah. 40 years later, you're retiring, probably earlier if you're a bit lucky.
yeah,
Yeah. So 5 years is a long part of people's careers. So if you imagine it was going to take 10 years for it to make a major inroad into employment, most people will be retired by then that are worrying about this. So I would not worry about it too much. Yeah. You can, if you wish, there's plenty of things to worry about, but over, let's say five, when it will start to be making its impact. Yeah. Well, if you're, a lot of people, a fairly large proportion of people will be retired over that horizon. Now,
yeah,
another way to look at it, which I prefer to look at it, is that not to say, well, you're going to be out of a job, but some of you are going to be retired by then, is to say, back when before they invented the steam engine, yeah, 95% of people worked on the land. So if you look at an empty field in Europe, for example, that would be full of houses, yeah, because the farmers had to live within walking distance of where they farmed. Yeah,
yeah,
and they didn't want that walking distance to be very far, which is the same reason why people's houses are on the blooming road, is they didn't want to walk, 5 minutes from their house to the main road because it was just too much of a pain. Now you wish you could, right? So anyway, 95% of the people lived on the land. Now it's 2.5% of the people who live on the land. So all those fields that you would see in Europe are all full of knives and forks, buttons, badges, buckles, money, coins. It's absolutely full of them because they lived there.
yeah.
Well, nobody lives there anymore. So everybody lost their job as a farmer.
Mm,
Now, when they were all farmers, they lived into their mid 40s. Yeah, they had 6 children, of which four would die before they were five. Now they live to 80 and they don't have to have 6 children because a couple of them will make it. You have two kids, you're incredibly unlucky if they don't make it to adulthood. Yeah.
yeah,
So you could say, well, I mean, they brought in the steam engine, we're all going to get fired. I'm worried about that. And yeah, maybe your house will get ploughed into the field. Maybe you will have to move to the city. But overall, that's a really good thing. Yeah. So it's going to be like that with AI. So yes, maybe a lot of jobs will be replaced, but it will just be new jobs. And the old jobs that robots can do will be placed by new jobs that robots can't do. And I tell you the job that robots can't do, and that's be interesting because most people are interested. The thing that they're most interested in is other people,
yeah,
right? Which is why you go to the cinema, which is why you go down to the water cooler and jabber away for half an hour. It's why you read the newspaper full of gossip about people. That's what people are interested in, and that's high up the value chain. So there'll be a lot more of that. And then the second thing that people are interested in is news. Okay. And then if you take people's interest in people and news away, you've got a small group of people that are interested in ideas and philosophy and science and stuff like that. And they're right out there in the corner. So what will happen is there'll be two jobs. There'll be consumer of media and creator of media. There'll be people like me and you, yeah, and there'll be people watching people like me and you and doing whatever they do that is interesting. Yeah. So there'll be the creators of content. There'll be way, way, way more creators of content, and there'll be way, way more people who are going to be interesting and important to other people rather than things. So that layer of things, plastic rubbish from China, that's all going to be done by robots for sure. But the things that you're really interested in, your dentist, your your therapist, yeah, your football player, yeah, all that stuff, your educator, yeah, that's all going to be the economy. And people go, well, that's rubbish, that is. That's absolute rubbish. But actually, what do most people care about? They care about getting home to watch the television or the match. Yeah. They're at work, pushing paper around or doing that. Well, if you're a doctor, you're actually doing doctor things. So you're people to people. Once you take away all the non-people to people stuff, what people really care about is the people to people stuff, family, entertainment, sports, activities like that. And there'll be way, 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 way more of that in the same, there's way, way, way more media now than there was 25 years ago. So there'll be a lot more media, and there'll be media creators and media consumers, and economy will be operating not at the primary level of hunter-gathering and farming, that's all gone, not on the manufacturing level of turning pig iron into iron bars, pretty much that's all gone. It won't be operating at the level of making plastic rubbish or shoes or suits or whatever. That'll all be gone. But the layer up there of services and education and government, that's what's going to be happening. And robots can't do that. And probably even computers will have a hard time doing it because people won't want them to. Now, if people want them to do it, that'll be a different thing. But that'll all roll out over the next, well, I'll be gone, but I mean that'll be all rolling out over the next couple of generations. And it won't actually be that quick. It's not a lightning thing. Well, they're all fired. Robots are all going to do it tomorrow. It's going to take, a generation, at least a generation. I mean, the internet was a generation ago, right? And it's
Yeah.
still rolling out, isn't it?
Yeah, but I guess in the span of human history, a generation's pretty quick compared to
Yeah.
how long it took us to get out of the, caves basically.
Well, if you think about caves, it took us effectively about 3,000 years. I mean, if you go, in fact, it's quite interesting. People go, oh, this is weird. I didn't know that. If you take a dog, okay, dogs are very, 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 very domesticated and they love humans and they're absolutely totally domesticated. That's because they were domesticated by hunter-gatherers, okay, which was the first thing that we did,
Yeah,
right? So they've had X amount of years to be totally integrated into human behavior. Cats, however, they were integrated into human behavior when we started farming, which was a good 20, 30,000 years later. Yeah,
yeah,
so they've only had 4,000 years to be integrated into humanity, and therefore they're still relatively wild, and they're still way less integrated than dogs are. So you can see that things take a long time. I'm not suggesting that cats will ever be fully integrated, but anyway, you can see that it takes time. And if you look at the Industrial Revolution, it was slow enough that although it disrupted, although there were big, issues with governance, for example, French Revolution was caused by the Industrial Revolution. Yeah, there's big changes. They're not going to be so fast that anybody who's 30 now has got to worry about being laid off by robots. I mean, they'll probably be retired way before that.
yeah, that definitely makes sense. I do think you're right. It's gonna take some time. I've seen like that Boston Dynamics video of them having the robot dog, which is somewhat impressive, but it's definitely not all
Well,
the
it's
way.
like 15 years ago when they did that.
Yeah, that's true. That's
Yeah.
true. Yeah,
I mean, the real problem is that it's coming along a lot faster in China than it is in Europe and in America. But
yeah.
even if it does come on even that fast, how long will it be before a robot can wander around? Those plastic robots you see, for them to wander around and start picking up car wheels and screwing on nuts and picking up the ones that they drop and that, that's Oh, it's way, way more than 10 years. Way, way, way more than 10 years. 30 maybe. So anybody that's 20 now will be 50. Yeah. And anybody coming through university now will be adapting to all that as it happens. And it's only the old fogies like me that might have a difficulty. Yeah, with it going, oh, it should be allowed. No, no, no. Back in the day when we had candles, it was so much better. It's going to be great. It's going to be fabulous.
So my only concern is, do you think this AI and robots, do you think it's just going to be a few companies having a monopoly on them, or do you think it'll be more decentralized and have a lot of littler companies having control over the AI and the robots?
It's going to be the software. And the software is what's going to be important. And the people that are going to do the amazing software, they're going to be 12 because they always are.
Yeah.
Yeah, it'll be some, great great grandkid of Bill Gates in a cupboard somewhere going, oh, I've got to do this. Look. Oh, that's really good, that is. And everyone going, oh, wow, amazing. It's doing that now. So it will be the software. Hardware is a bit more difficult, but actually the robots are just hardware devices for the software.
Right,
And
that's
so,
true.
no, I mean, who knows, but it's always the young people, right? If you think about the internet now, it was always these damn kids. And I wouldn't have done it if it wasn't for those pesky kids. It was the pesky kids. It was, the pesky Zuckerberg when he was at college. And before that, it was the pesky Bill Gates when he was in college. It's all these pesky West Coast kids in their garages that turn everything upside down. And this is going to be software. So that's always where it comes from.
Yeah, it makes sense. Software is really important, and the distribution of that software is important as well.
And it
Uh,
costs nothing to distribute it. It costs nothing to write it if you've got somebody who's brilliant enough. Yeah. And once it's written, boom, it goes out there. You see that time and time again, right? I mean, you can see it in the computer game zone with all those computer games, the Angry Birds of this world that came out of nowhere. The one I can never remember that Microsoft bought, the brick game. It all came out of nowhere.
yeah, that's definitely true. It's pretty amazing what.
Minecraft. Sorry, I don't want to appear ignorant, you see. Minecraft. There we are. There are a couple of kids in Sweden, yeah.
Oh yeah, that game's really popular still. I think it's the most popular video game out there. Um, so I definitely see that there's a lot of great things people have been doing. So going back to gold, you said China's preparing for war at 2027. So when do you think this upward ascent of gold is going to continue? When do you think there will be a major dip in the gold price?
Well, okay. Gold is for war, but the price is about conflict. Yeah. You don't have to have a war if they've got any. I mean, I see there's two themes here. There's AI and what I call NS, right? AI, artificial intelligence, NS, natural stupidity. Now, there's a huge supply of that, and that is driving us towards Armageddon.
Mm.
But there's, natural intelligence, which is trying to save us, and there will be artificial intelligence trying to save us. And I think the AI and sensible behavior will mean that we won't go down that road of natural stupidity, which we see happening over and over again. And, blessed are the peacemakers, right? And hopefully that's all going to be fine. But that ratchet, I don't see any peacemaker out there. So I don't see that this process of increasing stress is going to end soon. It's going to carry on going for quite some time. And, you know, that means gold is going to keep going up. No, it's as simple as that, really. It's until people start saying, look, what the hell are we doing here? Why don't we just all have our happy populace, happy populaces, and go for wealth and go for abundance and go for happy people and peace. I mean, peace. For how many thousands of years have leaders prayed for peace but behaved like they wanted war? Right. So, peace is could break out, and I believe it will. And I think there's a bumpy road ahead. And while we're on the bumpy section of it, which is the next few years, gold will appreciate. Now, if you see suddenly the headlines say blah 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 has said let's all be friends, and all of a sudden they're all hugging and saying let's all be friends and let's do this and let's do that, like they always do after there's a war.
Yeah.
Yeah. Then gold will probably go down.
Mm.
Yeah, and or will at least stop going up. So, that is what I see as the end of this road. I don't want to say I can't believe they're going to go toe to toe and start fighting, because that is too ghastly. But it's an option, and it's an option that they seem to have at the moment, and it's an option that they seem prepared to head towards quite rapidly. And so I think that's well, it's the gold price. Just watch the gold price. The gold price will tell you. The moment the gold price starts to do that, you know that you've reached a limit of what these people are prepared to escalate at. It's just a thermometer. Gold is the thermometer for conflict, if you want to look at it another way. If they keep buying gold, it's because they keep thinking the chances of a really bad conflict are increasing. When they say we've got enough, it means that they think they're not increasing anymore. So it's all about central bank buying of gold around the world, and then that will drive the price. The moment the price starts going sideways is the moment that we've reached an equilibrium of the chances of a conflict. The moment it goes like that again, you can go, oh no.
Yeah, that makes pretty good sense. So, switching gears again, what's your outlook for the U.S. dollar? Are we entering a long-term weakening trend, or and also, do you think the dollar will lose its or when do you think the dollar will lose its reserve status?
Okay, the first thing is the dollar's reserve status. Why is that a good thing? Everybody says, oh, it's a good thing. And I do like it when people believe that something is good when it's bad, or something's bad when it's good. Okay. If you look at the reserve statuses of currencies in the past, you'll note that it was all about gold and silver. And why did the pound have the reserve status? Well, because it had all the gold and silver. Why was it before that well, it's actually the French, but some people say it's the Dutch. The French or the Dutch? Well, because they had all the gold and silver. So it defaulted to being the reserve currency because they had it all. Yeah, it's like America was a reserve currency because it had all the gold at the end of the Second World War, because it won. Yeah, and all its allies that won had to send all their gold to America to pay for all the stuff that helped them win. And all the people that lost, well, they lost all their gold, didn't they? That
Yeah,
was that
that's
was kind of
true.
like the prize. Well, so it became the reserve currency, not because it could print paper. Now it's printed paper. Now, if you want to be the reserve currency when you're printing paper, you have to export your paper. Okay. So how do you export you can't just give it away. You have to run deficits. You have to run trade deficits, and then that enables you to run a fiscal deficit. So actually, if you want to be the reserve currency, you're going to have to run a trade deficit, and then actually you're handing out all your real wealth to the rest of the world. Well, that's pretty good when you've got it all, but when you don't have it all anymore, that's probably not a good thing. Why do you think China doesn't want to be the reserve currency? Do you think it can't be? It has twice as much currency in circulation as America does in terms of the dollar. So if you took all the yuan and you transferred it all into dollars by some magic, it has twice as much money in the global economy as America. Why
Wow.
do you think it doesn't want to be the reserve currency? Because it'd have to run a trade deficit. It don't want to do that. It wants to be the workshop of the world. It wants all the money, all the gold coming into it, right? It doesn't want all the gold leaving, like you have to have it if you're running that reserve currency status. Yeah.
Is that
So
kind
as
of
a as a geopolitical tool, it's a powerful one, but you're basically spending your wealth doing that
is that kind of like the old mercantile system?
in reverse.
Okay.
Yeah. If you're having to send your money abroad to be the reserve currency, that's the reverse of mercantilism. Now, you could make it a positive mercantilism if that money going abroad was buying gold. But if it's buying plastic rubbish from China, not the same. Yeah. The mercantilism is about bringing in cheap stuff, upgrading it, and sending it back and bringing in gold.
Hmm.
Yeah. Not sending your paper out. Well, you could say you're sending out paper and they're sending in plastic, which is better than paper. Unfortunately, they take that paper and they come back and they buy your farmland.
Yeah,
Yeah.
that's true.
Yeah. So that's the flaw of that. And the flaw of it is, oh, I'm a politician. What do you mean? I could just print money and send it to abroad, can I? Oh, let's do that then. Oh, but they can take our paper and come back and buy our farmland. I don't care about that. I want to be elected. Let's print more money.
Yeah.
Yeah. So that is the bug with the whole thing. I wrote a piece on Forbes about it being it's not a good thing. It's actually a curse. And it's not a privilege. Oh, it's the marvelous privilege. It's only a marvelous privilege if you're a mercantilist and you're receiving gold for all your paper, but you're not, are you? You're receiving plastic, and they're taking your paper, coming back into your country and buying your gold. Yeah.
Yeah.
And the reason they have capital controls in China is for a very good reason too. Anyway, what's the other questions?
So we talked about AI, the gold and silver, and some geopolitical events. So we haven't talked about Bitcoin. So Bitcoin has dropped roughly 20% in the last month. How long do you think this phase could last?
Well, your viewers might know this, but about a year ago, I went on record and I said, "Look, 100,000, goodbye. It could go up another 20,000, but I'm not sticking around for that because I can see 60,000 and maybe even 40,000 on the downhill, and I've bought at 20,000. I'm selling at 100. Thank you very much. Goodbye. I'm not that greedy. See ya."
Yeah.
Right? And I was expecting it to fold, I don't know, April, May, something like that. Well, it hasn't. It's just kept going up. And when it hasn't even gone up, it just hit 20,000, done that. I believe that the crypto winter has begun,
Mm.
and that will see if it is the crypto winter. And it's back to you've got a thesis, you follow the thesis and see if it works. It should go down to 60, it could go down to 40. And then that will be the end of the crypto winter. Now, there's a problem, a much bigger problem, and that Bitcoin is no longer the libertarian, don't step on me, death of the dollar, this is the way that this is hard money. That's all gone. It's now plugged into Wall Street at the hip. And if you want to watch the Dow and Bitcoin, they trade together. They're going down together, they're going up together. So, that is no longer this pure money anymore. It's Wall Street now. Well, Wall Street has a habit of taking money out of your pocket and putting it into theirs and buying houses in the Hamptons and yachts and stuff like that. Yeah. And so being connected to institutions is not a good thing. So it may just be the end of the cryptocurrency era.
Mm.
And blockchain would then parlay into a use case era where crypto is a power of a decentralized database economy, and which might sound like a load of gibberish to a lot of your viewers, but effectively, crypto and blockchain are meant to be ways of powering applications on the computer that is not centrally controlled, that is decentralized like the internet. Now, that decentralization enables you to do all sorts of funky stuff that's incredibly difficult to do centralized. So if you think about other private sectors' money, for example, American Express, travelers' checks as they used to be, Pink Shield, if you've got any old enough viewers to actually know what Pink Shield stamps or Green Shield stamps or Blue Shields or whatever, all these businesses that involve private sector money, they were very, very difficult to roll out because of the infrastructure that you have to have behind a private sector currency that powers a private sector thing. Yeah, but blockchain gets rid of all that. And so you can tokenize, for example, real world assets, although I'm not a fan of that. Which, if you tokenize them centrally, there'd be massive infrastructure requirements. But if you decentralize to do it, it's almost free. So the cost of decentralized blockchain applications is vast, and it can be powered by native currencies to those applications, and the power of that is vast. So that is probably the next thing that's coming. And now that cryptocurrency has been plugged into government regulation and Wall Street and financial services, that era, that crazy Wild West era, may be over.
You said Bitcoin might go down to 40,000. How long is that timeline?
I don't know, next 3 or 4 months.
Oh wow, yeah, that's going down quite a bit.
Now,
Uh,
there might be a little bounce coming up, but all you've got to do to test this thesis out when it happens is just look at the last couple of boom bubble busts, and just look at the previous busts and see how they panned out. Yeah,
mm.
and then at the end of the day, there's two choices. Let's just say it is a crypto winter. Now, your hodlers say, don't worry about it, just forget about it. It'll be 250,000 in 5 years, and that's 250%. Where else are you going to get that? And in another 4 years after that, it'll be 500,000. Another 4 years after that, it'll be 1 million. So, just hang tight for 16 years and your 100,000 will be 1 million. So, where else are you going to get that return? Okay, that's one way to look at it. Another way to look at it is it's going down. I think it's going down. I've got a plan. I've got a theory. It's going down. I don't want to be in it, and I'm going to buy it at somewhere under 60. Yeah. And I'll ride it up to 250. So there's the hodl, there's the invest, and then there's the trade. And for a trader, if you've got those sort of spurs and that sort of nerve endings and that sort of experience, it's a fantastic thing to trade. It's about the best thing you could possibly trade. But most people get killed trading because they haven't got that incredibly skilled job to trade when the market is not just going up. So to trade, it's heaven. To invest, if you get long, it's going to be hell in the near term, in my book. But you have to make up your own mind. If you're hodl, you've got to decide whether this is the last big Bitcoin cycle, which I believe is 50-50. It could well be. Or if you don't believe that, you just hodl, forget you've got your Bitcoin, don't lose your keys, and away you go. The only thing I would say is if we are going into a crypto winter, as I believe, and when people start to realize or feel that I'm right about that, be aware that there will be casualties out there, and make sure that you've got your own crypto in your own hands, not in some would-be FTX.
Like
Yeah.
Coinbase.
I can't comment on anyone in particular. People have to make up their own mind about those sort of things. But that you've got to pay attention to your counterparties. So if we did see, for example, if it did drop through 80 and was heading towards 60, yeah, in the 60s, you might want to look at your counterparties and go, yeah, they're all right, they'll be fine. Or, oh my God, it's wiggly woggly exchange in oobly woobly land. There will be casualties.
Yeah, I definitely agree. There is going to be some casualties. So moving on,
If we are in the winter.
right, if we're in the crypto winter. So moving on, so Wall Street sees a 50% chance of a US Fed rate cut next month. What is your take and how would this affect the markets?
Well, the Fed is always doing its dot graphs. And if Wall Street doesn't know within a penny or two what the chances of interest rates moving are, I'll be surprised. So it's already in the price. Yeah. The only person that isn't ever in the price is the guy in the White House. And even he must be getting pretty firmly in the price by now because he must have some element of predictability about him. But the interest rate falls, they should be highly predictable. Now, interest rates are coming down. That's it. They're coming down. They might not come down as slowly as we've been expecting because of this huge AI spend on building out AI, which is going to be trillions. However, what I think is more likely to happen is the Fed is going to start printing soon. Now, the thing you have to remember, if the Fed prints so you can all sit at home and not go to work and get COVID, you're going to get inflation because it's increasing the supply of money, but not increasing the supply of goods. Yeah. If you print a load of money to build AI service centers and it goes out and increases productivity by N% or multiples, then it won't create any inflation at all because the supply of money goes up and the supply of stuff goes up. So, it's quite a worthy way of increasing GDP by printing money to build AI out because AI's effect on productivity should be absolutely massive. And it's already had a big effect on GDP. And we all know when we use AI how much productivity it is. Now, yes, it may delay some lawyers. Yes, it may put some people out of work over time. Yeah. But the actual productivity gain from AI is pretty dramatic. And that can absorb huge amounts of money printing and actually could be really deflationary. But there's no such thing as deflation if you don't want it, because if you've got deflation, you don't want it, you just print money. Because it's all about the supply of money and the supply of stuff, right? So if you've got more stuff than you've got money, and all money is paper, or actually just numbers on a hard drive somewhere, you just make more money and it absorbs the stuff, and everybody ends up with another garage full of plastic rubbish. Yeah. So you don't have to worry about printing. What you have to worry about is productivity. And if everybody's walking around doing the zombie walk, what happened to productivity? It went that away. And
Yeah.
that's been a real problem with inflation, is that productivity has been dead as a door now because of, well, I put it down to social media, but I'm sure there's other excuses.
Yeah, I think there's a lot of reasons why productivity is going down, and I think that's definitely a very important aspect. So I'd just like to take the time to share your YouTube channel, Clem Chambers. I'm subscribed to it. Definitely, everyone, please subscribe to his channel. You can also become a member of his channel to see some exclusive videos. And there's a lot of great, important information on his channel and a lot of great videos that you can watch. And I'm also following him on X. Clem Chambers. So definitely follow him on X as well. He has a great feed and has a lot of great information on the markets on his X account. And yeah, Clem, is there anything else you'd like to talk about for this video?
Well, I've got to say, I've done a lot of podcasts over the years. In fact, I used to do lots and lots of CNBC back in the day. I must have done about 500 of those. But the response I get from what I do on podcasts like yours, Alexander, is way more than I ever got from anything on things like CNBC or even Fox for that matter. Not to diss them too much. Yeah, and so that's really exciting. And I decided a few weeks ago to start those channels up, and they've blown up. They've absolutely blown up. So that's been very exciting. And, I think people like the fact that I just shoot from the hip and I don't, say, well, maybe it will and maybe it won't, and maybe this is, maybe that isn't. And my channels are like that. I just say as I hear it. And, there's a lot going on. There's never been a more exciting time than there is now because things are popping all over the place and there's so much to talk about. And people can, I've written for Forbes for 25 years. So, there's a hell of a lot of stuff out there you can read in the past to make sure I'm just not wrong half the time.
Yeah, it's definitely true. I think more people are going to gravitate towards you because you give a lot of good information. And I definitely learned a lot of things that I didn't know in this interview from you. So maybe the next time we talk, you'll have 20,000 subscribers on YouTube and have some more followers on Twitter,
That
X.
would be brilliant. That would be brilliant. And I hope you're getting a gold button soon. So, by the way, viewers, don't forget to subscribe. Don't forget to like and comment and ring the bell because the only way you can reward this channel for its information is by doing that. Otherwise, channels like this just get buried. And it's unfair and it's not right because there's so much rubbish out there. The only way to punch through that noise is for people who are watching like you to do the right thing and click that subscribe button.
Oh, I really appreciate that, Clem. And I definitely would like to have you on the show again in the future.
I look forward to it. I can't wait. Anytime.
Oh, that's great to hear, and we'll definitely be writing you. And I'd just like to thank the audience for watching this video. Please share it with your friends and comment if you have any questions for Clem, and I'll send it out to him so you can get that. And just thanks again, everyone. I hope you have a good rest of your day.